Hello, Warriors. How's everyone doing? It's been tense here in Southern Cal. So I'm going to distract myself and trade my ass off. How you doing, Ingmar, Michael, Bran, the economy whisper? Hey, Bran. Psst, 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 pew, pew, pew. Blake, how are you? Glenn, Paul, Ryan, how are you? James, Kman's back. Hugo, hello. Paul Nash, you're a new name to me. Welcome to Face. Maybe you're not. Nuno, welcome to Face. All right. RC, how's it going? All right. So King Dollar expressing itself again today so far. And we have new lows in almost everything. How's everyone doing today? I think I'll start off with the yen here. And start off with Ryan. Good morning.
Good morning, sir.
So I had my power wasn't turned back on till well after the number on Friday. Yen didn't do much. U.S. dollar yen didn't do much on the strong number. Actually reversed after the number, unlike a lot of other markets. What do you think? A short-term peak in yields and yen coming off, maybe back towards 54.5 or so.
Yeah, when we were talking on the show Friday, I had a suspicion we might see something along those lines. Sort of last bit of, boost for the yields and dollar yen, and then it might turn around. And we've seen exactly that. We have opened with US yields, or did open a bit higher in the tens, but they've come back to sort of Friday's levels now. So, yeah, we might just be seeing a bit of exhaustion in that play at the moment. Although if we get a super strong CPI report on Wednesday, we might see another leg. But all the banks changing their forecasts, of course, seeing less cuts. Someone's even mentioned the H word as well, Bank of America. So no doubt we'll probably see some pricing along those lines. But
Well, what's that? Hooray!
Not quite.
Tell
Not
me.
quite.
All
The
right.
dreaded hike word that the Fed will not want to
Yeah.
start hearing around. But
Something. Yeah. As far as the exhaustion, I think it started to show up Friday with the
yeah,
shorter end of the market really accelerating, whereas duration hardly gave anything up. I just want to show how important, and I do think we could get a rally here this week. I don't know, maybe I'm wrong because of CPI and PPI, but this is how important this 85 level is. And tweeted about this, but check it out.
yeah, massive.
Look left.
Yeah,
Okay. So, and what I couldn't figure out what, could technically could take bonds down eventually towards 70. But if you just say we get a bounce from here and then we take out 85, that's 15 handles. 15 handles from 85 gives you 70. Okay, I think that's eventually where we're going. We're just going to get some relief here. I don't think it's a big turn. Some people are hoping the bond, guys like Rosenberg that have flipped a million times. But yeah, I think we'll get some relief here. But I
yeah.
don't think this is going to be a major bottom. Okay.
No, but it could be enough just to grab a few pips off of, and
Yeah.
that's all you want when you're trading.
Yeah.
It's not going through that level. I mean, your shorter term chart, your hourly chart, whatever, it shows you, the price has done nothing but come down over the last few months,
Yeah.
and now,
Correction time.
yeah, it's got the possibility of staging a bit of a bounce, because it's not going through that level.
Okay. So I see a 1, a 2. Maybe there might be one more shot down for a 3.
If you get
But
86, if you can get in, close to 85, and you can get out
yeah,
86s, you're
yeah.
making money.
Well, I mean, we should get. I actually think if we have a rally, we could rally back to 90 or so,
Yeah.
maybe 92. Um, anyway, when I asked Greg about it, he said we're in five. So I don't know if five's completed or this is 3 of 5 and this is 4 of 5, and we're gonna get one more for 5 of 5. Anyway, King Dollar still playing with the 110 level. I sold some Friday, a little more here. Just thinking that perhaps we could be putting in a high here. Uh, Euro still acting much better than cable, and the commodity currencies are stiff all of a sudden. I know you were looking at Aussie. Your view here?
Yeah, I'm looking at the Aussie for the RBA reasons, being pushed into faster hikes than they are expecting at the moment. But for this one, it's the same as the Kiwi. I'm still short Aussie Kiwi, and that's not doing an awful lot. That remains on the an uptrend, short term uptrend at the moment.
Yeah,
But yeah, it's Aussie dollar, Kiwi dollar. They're all in the same boat at the moment, because even Aussie dollar might just be a bit more firmer, just because gold was, has been bid
yeah.
pretty much in the early
It's
part of the
kind
year.
of a yeah, it's kind of a red day. I mean, silver never really had what gold had in it. But
Yeah,
and gold and I look at the gold silver ratio. So here's silver, but I look at this gold silver ratio, and looks like we could be going for new highs here.
yeah,
So which is kind of would say that the dollar might have more left. So what do you do with euro? And fundamentally, Ryan, you're in the of course you're in the UK, but
yeah,
your prime minister was taking a lot of heat while cable and gilts were melting. Although
yeah.
cable didn't come close to the last crisis we had in gilts. She was being heavily criticized for being in China while all of this was going on. And
Yeah,
I think you know how the UK, I was taught when you trade the US market, you follow the FTSE because the FTSE leads, and cable really used to be that way.
yeah, yeah, cool. Yeah, of course.
But anyway, she wasn't here in the US. Okay. She went to China. And I talked about the fact that with this new administration, Europe is going to be looking for other options for, backing. And the UK is turning to China. And I think Europe is going to be doing the same. And that's how people say, well, how can you like Euro? If China gains more influence in Europe and the UK, that's how you could like anything that's not a dollar,
Yeah,
okay, a US dollar. Yeah, so that's it. I think we're going to have a yield break, and yen looks heavy. Keep in mind this is still a failing rally in yen. Okay, we never got to 162, so just keep in mind that this could turn into something pretty interesting, especially if we are getting a dollar top. And
yeah. I don't
there's
think
no
we're done.
what's that?
I don't think we're done potentially in euro dollar. I think, sorry, in dollar yen. I think we still might see that
Okay,
162s if the BOJ don't hike, and if we get a
okay,
load of sources stories again saying they're looking to hike and they don't, then yeah, I think 160 will be there in a blink.
yeah. U.S. dollar won looking, better than U.S. dollar yen. They're
Yeah,
both
they
similar,
came out.
but a little better.
Yeah, we had some pretty strong language out from China overnight. PBOC and their FX regulator really, giving it the hard lines that they don't want to let the currency get too out of its pram, shall we say. So it's more verbals from them.
Okay. Welcome back, hey man. Thank you, Ryan.
Hello, Dale. Hello, everybody.
Welcome back, bro.
Cheers.
Cheers. How you doing?
Yeah, I'm doing all right.
All right.
The
Uh,
administrative nightmare, but yeah, I'm doing all right. Otherwise, yeah.
okay. So, any conviction anywhere?
Conviction is a big word. But you know what I said. I mean, the start of the year could be risky for sterling. Seems like that's playing out. Actually, even a little faster than I thought. I thought sterling may pause and then go weaker into or after the inauguration, but it started straight away. Market losing a bit of faith there. Um, yeah, we're getting into dangerous zones there on the sterling. If you look at 120, 121, 20 and a half, there's all levels where it's getting dangerous. So if we get through there, if we would get through there, I think it could still accelerate further. I mean, it's not well. The dollar is strong, of course, but it's not only the dollar. It's just like sterling is
Yeah.
behaving a bit weak right now. Now, I don't know
Yeah. I
how.
mean, look at this RSI reading. Actually got under
Yeah, but that
20
mm,
compared to euros. The RSI readings over 20. It's the weakest
yeah,
RSI
it's the weakest
structure
link
on the
right
board.
now. It is the weakest link right now, and I was also noticing after having been away that risk is well. I mean, if you look at equity markets, risk is coming off, but and then to come back on your Aussie findings is that Euro Aussie, which is normally a pair that should go higher if it's plain risk off. It is not. It's pretty stable. Not really going too far. So risk is still very uneven, and that is something that I noticed. So it's not just like one simple big trade that is going on. And but we are ahead of such a big event again, and CPI also to come out this week in the States. And now I want to look at those data. They're going to be important, but they may very quickly end up in the rearview mirror because we have that inauguration, and we have to wait to see what Trump is now going to slap onto the rest of the world, whether it's hard and speedy or soft and slow. That may decide upon a lot of markets starting next week and the weeks after. So a lot of convictions I don't have.
Yeah.
I,
Got
I
it.
did take profit on parts at least of my long gold because of the move, which is completely, let's say, not contradictory, but with the rest of the dollar moves, it was holding maybe a little too well, too nicely. Yeah, you see that we tried to break the triangle and
Right.
failed.
Yeah.
Yeah, and I still think that silver, that was what you were talking about. I still think that silver may underperform because we are not sure about growth anywhere. Not even post-Trump, it's all going nice in the States, but we are going to need global growth and perhaps a Chinese revival also still to get silver really going to the top side. So that's about my findings that I have right now.
Okay.
No big plans, but yeah, no, actually no big plans right now.
Okay. All right. Hi, Blake.
Good morning, Coach, and
Uh,
welcome back, Kman.
it's
Thanks.
Hello.
still touch and go with the power here. It depends on the winds. So,
Oh man,
we're
and so I guess well that explains why you were out on Friday. We told everybody that you're having power grid issues. So yeah, these fires are really affecting you guys.
I
yeah,
told them that
and
you're having a barbecue.
Yeah.
yeah, yeah, okay. Yeah. I tell you, it's tragic.
That's funny but not funny, Steve. Funny but not
Yeah,
funny.
yeah.
But all right. Well, Dale, how's it feel for you to be back, and what are you looking at now?
Well, I'm still looking for a dollar top here. I loaded up on S&P puts last week on Tuesday. I'm thinking about where to take it, or do I have enough patience to ride it for a while? It's pretty ugly.
Yeah, well,
It
today we broke
also,
the 618 retracement,
yeah,
or overnight. I mean, this is I think it's a pretty key level of support that we broke
and
here.
Bitcoin's finally confirming it. So there you go. Breakdown everywhere. Metals lower, market lower, crypto lower,
Yeah. Well, so as
dollar
far as
higher.
Bitcoin goes, obviously the big pattern right now is the big head and shoulder pattern. So we're there. I'd argue
Yeah.
that we're pretty much testing it right now. I think this is a big one. But as far as like the S&P goes,
Remember
yeah,
the
I
wonderful
mean,
times that crypto maniacs were trying to convince that cryptocurrencies are uncorrelated assets, and that's why they're a benefit to a portfolio.
It's funny. I was at a concert with a bunch of 40 to 60-year-old people this weekend. And one of the dads who I see, twice a year at these concerts, we always meet up there and go, and he's one of the big groups that we go with. Anyway, he's like, I saw you on Twitter, and because I commented on one of the kids that we know is got committed to a college for sports, and he goes, yeah, I see you're in currencies. I just started I just started putting money into Bitcoin this year, and I'm like, oh boy, when you have those kind of
There we go
conversations
again.
with with people that he's like, I'm like, how long have you been like kind of in the crypto world? And he's like, well, 6 months, and I listen to Raoul Paul, and I'm like, oh boy,
Oh,
so
perfect.
I'm not saying that that's wrong. I just kind of, but I do think that Bitcoin, does stand to take a bit of a move lower here. I mean, the head and shoulder pattern, if it does break, Dale's been pretty bearish on this. I mean, it takes us right back to 75,000. The big breakout point, and that seems logical. You get a lot of mom and pops buying into the craze. You gotta get them wrong footed, I would think. So that's
No matter of the rest of the arguments of owning cryptos or not owning them or whatever, whoever doesn't comprehend that they're highly speculative and risk correlated assets, I don't know what to say. There is
yeah,
no way, for example, that equities are going to be tanking lower and cryptos going higher. You
yeah.
can take that to the bank.
Yeah, I mean, this whole move. I mean, we completed the. I mean, this is the long-term cup and handle pattern. We've been talking about this for, my God, like literally years,
Months.
and we finally reached above 100,000, and so of course we're going to come back down, and get people out, especially the late bloomers, and I mean it's just the cycle of life in the markets,
Yeah,
right?
and
That's all it
fundamentally,
is.
don't forget that in order to get this kind of a rally, we needed, first of all, an unbelievable rally in equities we've seen during the past 2 years, and at the same time, extreme enthusiasm about the Trump administration, in essence, making a reserve, etc. And I've said it in advance. I think this is one of the many, uh, let's say, promises, although it's not a direct promise in this case, that this administration, in my opinion, is going to disappoint and not fulfill.
Yeah.
Well, it is. It is the first time a new president endorsed an asset class in my lifetime.
Yeah.
Well, he also made the Space Force too. So
Yeah,
hey,
it's too bad, Blake. You're a little bit older, right? You could have been a space marine.
I could have been a Space Marine. I could have been, yes, just like in Starship Troopers.
Yes,
Um,
exactly.
I could have been somebody. I could have
hey,
been a contender.
so Dale, you said you're looking for a high in the dollar. I actually closed. I had a bunch of dollar short like over the last week,
Yeah.
up until the non-farm payroll. I was just, I had some feelers out, thinking, okay, maybe the dollar completed a 5 wave, um, move up, which I've since, removed that because, after non-farm payroll, I'm like, I can't stay short the dollar. But the dollar to me looks like it's going to reach even higher now. I mean, because it is, continuing to break out. We do have channel resistance maybe around 111.50. It's also the 78% retracement, but it's not just the dollar. I mean, you look at yields, and this is like the 30-year yield. This is a big level that we're getting to. And these are, I mean, look at the 10-year yield. I mean, we're popping our head higher here, and it's not just US yields, it's global yields too. And that's the biggest fear I have about the dollar, is that yields are going to continue to rally. Bond vigilantes are going to, just kind of, push the market until the Fed or
Exactly.
the Treasury Secretary Bessent or, the new Trump administration has to actually do something. And
I've been saying that, Blake, for a few days. It starts feeling that the market is going to keep pushing until they get a reaction. And in essence, this is a self-fulfilling prophecy.
Sure. Yeah, we've cracked a lot of big levels in the 10-year. This is the notes market. Here's the bond market. And it looks dangerous. I mean, it looks like at this stage, you have to continue to, look for new highs in the dollar. I was going to buy the euro. And if you guys listen to the week ahead video, one of my trade setups was to buy the euro at 102. And we're here obviously right now. And first question I got when I jumped in the chat room is, "Hey Blake, you going to buy the euro here?" And my answer is no, I'm not. I don't want to buy it here. Now, that doesn't mean I won't buy it later today. Like if we saw some sort of price action, maybe we scaled above the highs of the day and there was a reason to be buying the euro, I might do it. But I still think the euro looks dangerous. We're at a long-term 618 retracement. Stocks look weak. I know we've had a little bit of a recovery since.
They always look the worst at the lows.
Of course, and things look most bullish at their highs. I know we're at a 618 retracement. I noted that on the week ahead video. I'm like, but we have a lot of options expiring here around the 102 level today, and I'm just not comfortable. I'm not comfortable selling dollars just yet. But yeah. Ryan, you put together the options.
I'm never comfortable.
Yeah, Ryan, you put together the options, together for the markets here. What do you see for the euro that expires today? That's got your attention.
Yeah, we obviously got that big one, fairly big one, 3.28 billion right here on the figure. We're gyrating around it at the moment. This is a big level, 102. It's a big historical level. It's a 61.8 fib. Of that 2022-2023 move, so it's a bit of a line in the sand. If we're under there, then we're going to be likely heading towards parity. But one thing I noted this morning, anyone's looking at euro dollar, the parity number is a big level, but the 99 level is more important because it's often been a bit of a safety net for any breaks through that parity number. So 99 is probably more important in my book than the 1.0.
Well, I mean, if you think about that, like technically, if we do make our way down to, let's just say, parity, and we get below the parity level, 161% extension comes in at 99.80, 78% retracements at 99.12. So I could very easy, and then you got channel support that's down there too. So I could see that being potentially tested. So let me. I know you and Kman were having this conversation on the Flow Show, and if you guys don't listen to the Flow Show, you should listen to it. You can, and if you're like me, I listen to the recording because it's already happened since I was asleep during the Flow Show, but. You guys were discussing this about the euro. I mean, what's going to turn the euro longer term? I mean, what could actually turn it? I believe it has to be more of a dollar story. It has to be the administration talking down the dollar versus something changing in Europe. I mean, is there anything out there that could really, really shift Europe?
It depends whether you look at it short or long term. If you look at it short term, we were saying, like, I mean, there could be bounces and things, but
Yeah.
to me at least, a lasting bounce. Yeah, of course. I mean, you can have the U.S. administration, and you know, I'm.
Did we lose Kman?
Yes.
That's
Yeah. Am I back now?
Yeah, you're
Yeah.
back.
Okay, I don't know why my microphone default keeps on changing. No, as I said, I mean, I think further down the road in 2025, the dollar may turn, and I think it will. But the problem is also the other side of the medal, you know, the euro. We are going to need at least one, if not both, of the two engines, Germany or France, turn the corner to really lastingly, to really say that we can really buy euro dollar and sit with it for levels back up to, I don't know, 110, 15, 20. But that for the time being is really not happening, and so we may have to be patient on the euro dollar side. But yeah, other dollars may be different earlier, sooner.
Okay. You know, and I don't know. I mean, I just look at it as, you know, we have to break, and this is every dollar pair, by the way. If you look at the euro, here's sterling. I mean, just look at these channels. All right, here's sterling. We're almost at, you know, very, very extended channel support here this morning. Aussie dollar is in a, you know, descending channel. Kiwi's in a descending channel. And, you know, this just tells you, and here's the dollar Swiss, that this right now is really more of a dollar story against every major. And yeah, I believe that the euro, you know, could, you know, give us a recovery, you know, maybe back to 104, 106. But I'm going to have to see the dollar really turn against everything. And speaking of which, one of the currencies I want to keep an eye on is the dollar CAD. One of the trade setups from this week ahead video is I do want to sell the dollar CAD on any rally above resistance. I think if the dollar continues to extend its gains, it should drag the dollar CAD higher, and I am going to sell a rally. I actually believe Trudeau leaving office is going to be a net positive for Canada. So this is one of those that I will try to play counter trend for now, but you know, I guess the question is, are we going to be able to get up there? I mean, the Canadian jobs report on Friday was actually blowout. One last thing I want to go through just before you know, before we go, and I know we talked about it just a second ago with the S&P, but the S&P is breaking lower this morning, and take note of that. I mean, this is a multiple test of these lows. Friday we closed basically at the 618. Today we broke below it. You can see that spike low from the 25th of January, spike low from December 24th. And you can see the lows right over here from November 19th. So we basically broke through those lows. I'm sorry, that was, yeah, December 20th. I said no, December 24th, December 20th. Anyway, we broke through those lows today. We are getting, you know, it's obviously as traders step in, they're trying to buy, you know, futures a little bit this morning. But I think that any rally, you know, towards 58.20 today, especially right at the open, is probably going to find sellers. So just think about that as we go into it, and how that's going to affect the market. I think the dollar is going back to its you know, risk off. And the dollar seems to be strengthening. We talked a little bit about that last week, and I think that's kind of like the default currency at the moment. Oh, one last thing I wanted to ask you guys about, Ryan. You were having some conversations about the yen, and there was just a tsunami warning, right?
Yeah, there's some earthquake activity going on in the sort of the southern tip of Japan at the moment. So just keeping half an eye on that. There are some nuclear plants down there, but everything's fine and dandy at the moment.
I've seen that movie before.
Yeah, I mean, hey, I remember. I'm old enough to remember when the yen moves on tsunamis and stuff.
Yeah,
But
Fukushima.
yeah, that was
Yep.
that was a gnarly one. But how do you guys feel about the yen right now? Ryan, I know, like I said, you guys were talking about it this morning. Any opinions here? Because we are seeing a little yen strength right now.
Yeah, a little bit, but I think that's more what's going on in yields, as Dale was talking about earlier. I can't see this one straying too far while yields remain well sort of bid, if you like, up here. But the Bank of Japan might swing into focus if we get a few more stories, like we did last week, that January is a live meeting for a potential hike. Then we could see a little bit of yen strength coming in. But if they don't go, then all being equal with yields and whatever, we're probably going to be heading much higher again.
Gotcha. All right. Well, I know we have Joseph, the Fed guy here. He's going to be joining us, and Dale, and today. So really excited to have Joseph here, and I want to thank Steve, Ryan, Kman. Welcome back. It's nice to have you guys all here. And Dale, it's great to have you back as well. I know.
Stay
I know.
tuned.
Is Joseph here? Did you find him?
Yes.
Oh, he is. Okay, great.
Yeah, I'm here. Hey, how are you?
Hey, good morning,
Hey.
Mr. Wang. How
Good
are you?
morning, guys. Good morning. Good to be
Good
here.
morning.
Good to hear your voice.
Thank you,
Hey.
Joseph. I didn't with you. I never have to be Forex guest hunter. You're always here.
He's
Appreciate
the
it.
Johnny on the spot around here. So,
Yeah.
Joseph, good to see you and good to hear your voice. I'm going to pass you over to Dale. And thanks, everybody. Oh, one thing I didn't mention, if you guys haven't checked out we do have instant funding available for the Trader Funding Program. If you are a non-US trader, so check it out. You just go to Trader Funding Program and see the two different types of funding programs we have for you. For those of you guys that need some extra funding out there, or want to be able to leverage up your money a little bit. So, Dale, it's all yours, buddy.
All right, Kman, thank you. Ryan, thank you.
Cheers,
Lake,
mate.
as
you,
always,
Dale.
guys, have a good day hunting. And
Thank you, Dale. Have a nice interview.
hey, Steve, you too, buddy. And Joseph, Happy New Year. How are you? You still with me, Joseph?
He seems here and
He's
he's
unmuted.
muted.
Oh,
Yes.
yeah, he's
Hello.
unmuted. Okay, there
now-
you are. I got you. Happy New
All
Year,
right.
Joseph.
Happy New Year, Dale. Good to see you. Thanks for inviting me.
Yeah, I see you have some new things happening, new offerings. I think I caught it on your stream. You want to tell the crowd about what else you're doing besides your courses before we get to the markets?
Sure. So, I have a weekly newsletter called at fedguy.com where I talk about my views on the markets. I also have a market portfolio where I illustrate how I'm implementing these views in case anyone is interested in how I am allocating right now. So that's the new thing this
Cool.
year. And of course, every week I also have videos on YouTube at my channel, Joseph Wang, discussing what happened in the markets.
All right. So plenty of content. And if you're confused about what's going on with rates, Joseph will give you some deeper understanding from having been on the desk and been in that institution. Not a institution, but the institution of the Fed. They may need some shrinks before this is over. So top of mind for you going into red sweep and tariffs coming up, and this is the first time in my career that I remember the Fed starting an easing cycle and the market rebelling against it in this way. Tell us what's going on through your eyes, Joe.
So I think we're at a turning point here when it comes to rates. And I look at the world uh, as a building block, first and foremost, what rates are. And from there, you can build on to other assets like commodities, FX, and equities.
Okay.
So as you noted, the 10-year yield has been rising, even though the Fed has been cutting rates. And that is largely because the market has been steadily pricing out Fed cuts.
Right.
So we were pricing in as many as 5 cuts this year, just a couple months ago. Today, we're only pricing in 1 cut. And that is actually a lot than the Fed's own dot plot, which guided towards 2 cuts this year. And so the 10-year yield has been rising because the market is becoming increasingly hawkish. They think that the Fed just is not going to cut. I think that is not the right way to look at this, and I think the market is really getting ahead of itself. So with the 10-year yield here at around 5%, it's very clearly exerting downward pressure on economic activity. And you
Yeah.
can see this through housing. If you look at the
Yeah.
earnings call of Lennar, they'll tell you that things are not good. They had a huge miss
Got
in
it.
their units delivered. If
There
you
you
look at
go,
the home
buddy. Ask and
builders,
you shall receive. Yeah, all of them are. They've been
yeah, the
getting
home builder
killed.
stocks, they're just getting crushed.
Yeah.
And if you look at what's happening abroad, you can see that U.S. Treasury yields are dragging up foreign yields, strengthening the dollar, and that's all tightening global financial conditions and pushing a lot of other economies that haven't been doing as well into recession. And of course, you can see that it's having a very clear impact on equity markets. So I think
Yeah.
we're topping here in the 10-year yield.
Okay.
And going forward, I think that it's going to be more obvious that this is having an impact on the economy, and then the market will begin to price in more Fed cuts again.
Okay.
Now, this being
all
my
right.
core view, that has direct implications on things like FX. I think the dollar is definitely, at least for the moment, topping here for a bit. As
I'm with you.
yields come down, you'll see that interest rate differential narrow a bit, and you can
Right.
see the dollar, I think, come off the burner for a bit.
Okay.
I think for some currency pairs that could be significant since you really do have a lot of people long the dollar right now. So I think some degree of
I would say the most hated currency would be euro. That's where you get all the bad news. So is it possible the euro is underowned, dramatically underowned? I remember talking to Andy Constant, I don't know, about 5 months ago, and he said it was starting to become underowned, and that's when it was much higher. So what's your favorite fiat against
well,
the
obviously the
dollar?
dollar is still I think is still much better than the other fiat currencies. It's just that I think we're just really stretched here given
Okay.
the rates. What I'd like to see is the yields come down, market price in more Fed cuts, see the dollar weaken a bit, and then I would go back and buy the dollar. I just think this is more of a,
Okay.
kind of a medium term, okay, I don't know, short to
Yeah.
medium term reversal. But I think if you have a longer time horizon, I think the dollar is going to strengthen against these other currencies, including the
Okay.
euro. Now, the euro, I mean, when I look at Europe, it's very difficult to have to be very constructive on Euroland since they're just not doing very well. There's no growth there. And at the same time, there doesn't seem to be any solutions to help that. It looks like they're going to miss out again so they missed out on the 1990s tech boom, and it looks like they're missing out on AI again. And I don't think there's any political movement there to fix that.
Okay.
So
How
I think
about
that's
the dollar
difficult.
against yen, which if it's pretty
Okay.
tightly correlated to yields. So if you're looking for a correction in yields
I
here, or
think
maybe,
I am most bearish USD JPY, so very bullish the
yeah.
yen. I
Okay.
think right now we could have really big moves lower in the USD JPY, not just because the interest rate differential, but because the incoming administration is very
Yeah.
clear that they want to have a weaker dollar. I mean, they don't want to lose reserve currency status, but they want the dollar to be weak enough to help with exports.
Right.
Now,
All right.
as Trump and his team go about and try to do this, other countries will respond. I don't think the Europeans are going to be willingly to strengthen their currency. I don't think the Canadians or the Chinese will. But one country that has always been, I think, very receptive to U.S. guidance is Japan. And this is true as early as the 1980s when, during the Plaza Accord, the U.S. basically strong-armed Japan into strengthening their currency in a huge way. So I think that is all still true. The Japanese are still on very good terms with the U.S. and still highly dependent upon the U.S. for defense. And so they just have a long history of listening to what the U.S. government says. And
They're
I
not
think that
happy about the U.S. steel deal, are they?
Uh, you know, maybe Trump would do something about that, right? That's something that we can have changes in the U.S. administration.
Well, he'll do something about everything.
So one thing I would also add is that I think in Japan, and as someone else discussed on this call, is also having some problems with sentiment being impacted by weak currency. So the people are unhappy there. And also inflation does seem to be sustainably above the 2% target of the BOJ. And so I think they would also be happy to strengthen their currency a bit, since that would be good for the political class over there in Japan. And I see someone in the comments noted that Trump doesn't like the deal as well. Well, we'll see. I haven't really looked into the details of that, but if Trump and Biden can agree on something, I think that's that's surprising.
I wanted to ask you, should this narrative play out, and I've been having a hard time, with the puzzle pieces because I am looking for a weaker dollar and lower yields and, a weaker dollar. Do you think that that's going to translate, pull back in yield soften and the dollar soften, translate into stopping this risk off move? Or it's going to happen because of risk off?
So I think that right now, it depends on your time frame. It looks like, I mean, listening to the options people, it looks like that we could be due for a bounce. And I mean, if you look at VIX above 20, you can easily see some kind of volatility crush here, sending stocks, for a rebound higher. Now, throughout the year, I'm very negative on U.S. equity markets. I think that we have a lot lower to go. Now, the reason I say this is because, one, as Trump comes into office, now I've studied Trump for many years and I've looked closely on the incoming economic team that he has, listened to their podcasts and their writings and so forth. And I think he really is going to try to shake up the world, put on tariffs, try to raise more money from tariffs, and also try to reshape trade flows. And that all that is going to be very, very disruptive to business.
Yeah.
And I think just as importantly, I think that there's a lot of foreign money in the US simply because the US stock market has been doing very well. And the US is kind of where you need to go if you want to have exposure to all this AI stuff. And as the dollar weakens, a lot of these foreigners are just going to get out simply because they don't want to have these currency losses. For them, it's been really good on the way up, strengthening dollar, higher equity prices, double play. Now on the way down, I think they're going to have to get out. And I think that we could have a pretty big decline in the equity market this year. Again, it's not like we're going to go to the Great Depression or some kind of financial crisis or anything like that. But I think we'll have a pretty sizable decline this year.
How about 4,900 S&Ps?
I could see 5,000, yeah, somewhere around there.
All right. Maybe it happens in a hurry the first quarter, and then some of the policies that he starts to get through, we get a big recovery after the first quarter. Could that be in the cards?
Totally possible. I do think that we're going to have, so again, looking at this from a policy perspective, if you are President Trump, you know that you have your next midterm elections in 2 years.
Yeah.
You know you want to do big changes, right? The way you do this is obviously front-loaded. Do it now. Make sure all the commotion is out, and then next year, right, you ride the recovery higher. Then everyone feels better. You go into midterm elections. Yeah, the stock market declined a lot last year, but look how much higher it is today, right? So that seems to be a very good playbook. And first 100 days are obviously when presidents usually do their big moves.
Yeah, well, I wish that we had 100 days to work on the debt ceiling, but we don't. And it seems like they want to get the grand package through, including the debt ceiling. Any concerns about during these early days that there could be any upset? And then something else, Joseph, no one's talking about. Remember before the election, how everyone was very fearful of a port strike that was not settled, only delayed. And I think we're in that zone now to see whether or not that happens. That could be a supply chain issue and have people thinking about inflation as well, right?
That could be. So I don't know enough about that to comment. I mean, it seems like the government can always do something to bribe them. So those things always,
All right, we'll
they
see.
often dissipate.
Yeah. Okay. And what about debt ceiling?
So the debt ceiling, it can have some temporary disruptions, especially about the plumbing of the financial system. I just don't know
tough to
enough
say.
about the politics to see
Yeah.
everything will go through. So
Do you agree?
those things are, yeah.
Yeah. Do you agree with me that what we know we don't know with
Yeah, I
how things are
don't.
going to be in a week or so?
Yeah, I don't know what the dynamics of the relationships they are in the new political players and so forth.
Yeah.
So I can't comment on that.
Yeah, it's going to take some time. So, okay, so um, takeaway is pretty bullish yen, bearish US dollar yen. As we speak, the dollar started coming off here, Joseph, and you just think it's going to be a correction, nothing major, like we won't revisit par again
Or for the euro, you mean?
for Dixie.
So where are we now? I usually look at the pairs rather than Dixie.
Okay, so euro. Will we see could we see 112 again? Because
I
down
don't know.
here,
That's a lot. I don't know.
is it?
I mean,
Okay.
I could. So listen, looks like we're having some kind of support resistance around 105. So we could break above there, but
Okay, yeah.
I think that just a medium term view, it does seem like the dollar is just the U.S. economy is doing much better, and I think that gap between the U.S. and the rest of the world has been widening the past decade simply because the U.S. just has a lot more productivity, which you can think of as technology, and it looks like the trend here, a couple trends, right? One is that the U.S. has AI and other
Uh-huh.
countries not so much. The second is that other countries can't even have AI because, like in Euroland, they don't have enough energy, right? One of the big trends in the US is that all this AI stuff requires a lot of electricity, so everyone is building,
Yeah.
new power
Natural
plants,
gas.
nuclear like stuff like that.
Yeah.
You don't even have that in Euroland, and right now, when the weather is cold, you can see gas prices surging, and that's a political decision, right? Some countries don't like nuclear. Some countries they don't want to buy gas from some other countries and so forth. So that suggests to me that even if they were to have AI, they would not have the infrastructure to support that, and
Okay.
that
All right.
productivity gap that we've already seen widen between the U.S. and Europe over the past decade, and it's notably wider today than it was around the financial crisis. That's probably going to continue.
Okay, that's it. I just went to your website so that we could talk about some of the things. So you want to give me a little bit more? I think we've covered this is really the topic that we've been talking about, shifting flows,
Oh
right?
yeah.
Okay,
Yeah,
so
and today I
go
will
ahead.
talk about my argument why yields are peaking around here. I think it's really hard for the 10-year to be, above 5% for now. Eventually, I think that we are on a path where I think secularly, globally, yields are going to go higher. Inflation will be a bit higher than before, but it's not like it all happens in one day.
Okay. Um, Interesting. So something I noticed Friday that was a little bit of a market tell was when after the number, the 10-year never gave it up, and it actually, is tried to make some new highs early in the week. The long end, which everyone's been shunning, hardly sold off Friday. But I wanted to ask you about this chart before we go, because this level here at 85 on TLT, if you look left, is huge. So we should get a bounce from here, maybe back to 90 or so, maybe 92. But if we close under 85 here, Joseph, just technically, um, I have targets down here. Could you see TLT sometime this year trading at 72, 70?
I don't
that
know.
range?
Well, I mean, what is that in yields? Is that above 5% on the 10-year?
Probably.
I think that's
Yeah.
really hard to sustain, right? So, I mean,
Not
this is self.
sustain, get there.
I don't know. This is kind of I look at this as a self-correcting thing, right? Yields go up. What happens? Equities tank, economy tanks. Okay, then people go and run back for safety in yields. One other
Okay.
thing I'll note is that there's a lot of tools the government has to lower longer dated interest rates. One thing, for example, that I think they will do is they will change regulations, the banking regulations, either be taking off the asset cap of Wells Fargo, either it be adjusting the leverage ratio to encourage banks to buy more treasuries. And you can unleash like hundreds of billions of dollars in demand just by doing these simple things. So
Yeah, okay.
these guys, this stuff, listen, yields, this is just numbers in a database. Government has a lot of influence over it.
Okay. And first time I've heard you pretty bearish about the outlook for equities over a longer period of time.
Yeah, last year was all about to crash up, and we did crash up. This year, it's I think we'll have a whoosh sometime this year.
Okay. Do you think that we're having a rotation out of tech, Mag 7 stocks, and a rotation into perhaps commodity stocks? Oil's been acting better. The miners have been under pressure for a long time. The industrials have been under pressure. Could this IWM, small caps, could that be a place to accumulate on weakness? Where do you think the rotation is going to go? Because it's illegal to go to cash. You have to rotate. You have to rotate from one sector to another. Where's the money going to flow from big tech?
So I think we have to be careful when we think about things on a sector basis, because a lot of times, we want to think that there are a lot of investors who are allocating between sectors and so forth. But a lot of times, you have greater forces at play. For example, a very well-known trade over the past year was the dispersion trade, where because of options activity, the S&P 500 was pinned. And so that created a lot of dispersion and volatility, where people thought that you were, outperformance of the Max 7 and so forth, whereas it was largely driven by these dispersion trades, which were pinned by greater option flows. So I'm not really sure there are that many people in the market that are allocating by sector. It seems like when people buy stocks, it's really like an index level basis. So that's how I think about that. Now, with respect to commodities like miners, I've been looking at miners too, and what really surprises me is that they just go down and down and down every day. Now, in theory, I'd like to say that we are in a world where we could have, for the next 10 years, higher inflation than in the past. And so in theory, commodities would be the place to be. But you just can't see that in the miners at all. They just get sold every day, and it looks really terrible.
It's
I
the
would
most
like to buy.
contrarian trade on the board, because you know what? Physical gold bulls and silver bulls, which you could question silver bulls right now, they hate miners. There isn't anyone that likes miners. Even gold bulls, okay, and silver bulls hate the miners.
For good reason, I think. For good reason. Anyone who's bought a gold and silver miner knows that it's not a good investment. So I was more referring to the diversified miners like Vail or Rio or BHP. I would like to buy those after the whoosh, should it happen. I would like to buy those. And aluminum too. I think aluminum is something that we're going to have to need. If we have to rebuild the grid, which we will have to rebuild the grid eventually, because I think the future really is electrification. It doesn't mean that we're all going to be using wind and solar, but I think we definitely will be having a lot more need for electricity, probably generated by nuclear in the future. And so in order to rebuild the entire grid, we're going to need a lot of aluminum.
A lot of people are saying it's nat gas is the bridge. And we've had a real nice move there.
Yes, and part of it because it's very cold, and nat gas is a heating gas for a lot of people globally. Also, I think that, there's some commentary about, maybe things would change after Trudeau slips down. In Canada right now, if you were to buy some of their natural gas, their energy companies in CAD, if you have going forward, let's say the dollar weakens a
interesting.
bit, you could have a double play where you could have appreciation. You can win by the Canadian dollar appreciating, and
Yeah.
also the energy companies increasing due to higher energy prices. I think right now some of the oil prices are due to geopolitical risk. We did have that increased noise about Russian sanctions, but that we'll see how that plays out.
All right. So, you said double play a few times during this interview. So, what position did you play? Were you a shortstop?
Yeah, so I own a lot of so looking at USD CAD, I can see that we are really at times, at 1.45. That's historically that's oftentimes where we reverse. We could go even higher. I don't know, but I think this is a good level. So I bought a whole bunch of CAD and I use that to buy dividend stocks in the natural resources sector on the Toronto Stock Exchange.
Oh, well, thanks for sharing that. So there you go. Joseph, not just talking about things, but laying out what he has skin in the game. And thanks for doing that, Joseph. And I want to thank you for all the years we've been able to talk together, and you edify the F.A.C.E community. And we all want to thank you.
Thanks so much for having me, guys. Happy trading.
Yeah, good hunting, Joseph. See you in the spring. And everyone, at the minimum, follow Joseph on X at FedGuy12 and go to his website and check out his letter. I'm going to be checking this out because I get some stuff from Joseph, and it always makes me think. And when you have people like Joseph that you can read and we get to talk to them, that keeping an open mind will keep our accounts open. So,
all right, great, guys. See you later.
All right, see you, Joseph. All right, everyone, that's a wrap. Hope you enjoyed it. Could join the team in about 18 minutes on the morning edge. Trying to get a little bounce in euro. Dollar coming off a little bit. Yen's bouncing. So, I don't know. I know everyone hates the euro. So I just think that I agree with Joseph. I just think there might be more duration to the downside because I think that we're going to take out par sometime this year. Okay, over 112, I'll throw in the towel on being a dollar bear. But until that time, I think we're set up in here, like here. So remember, don't just count your pips, count your blessings. And we'll see you tomorrow for Turnaround Tuesday. Adios, everyone. Have a great day. You're very welcome. You're welcome, Laura, Patrick, Ingmar. Adios.